Welcome to episode 12 of the Knowledgeable Podcast. Anything I say or do is not financial advice, and anything I say in here to go out and do not do it. This is just for fun, and that's basically all it really is for, and for your enjoyment. And maybe you'll learn something new, I don't know. But let's get right into it. So today, the market's kind of doing what it did yesterday, where it came way down and is coming back up a little bit, but it might be coming back down a little bit. But I don't know. But let's be honest. So the last couple of months, it's just been going boom, 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 basically. Staying on this trend line, and it finally broke the trend line. Now it's under the trend line. So the trend is gone. Now there's a new trend coming. So right now it's going down, which a lot of people expected, around 5 to 10% decline. Could it decline farther than 5 to 10%? Yeah. Could it decline less than that? Certainly. Anything is possible. It's a stock market. They could come out with news saying World War III is happening and the entire stock market will crash for at least the next couple of days. So, you know, there could be anything that could happen. But besides that, yeah, we're expecting around 5 to 10%. I think we still could see a huger market downtrend. I was looking at the numbers a couple of days ago when I was talking to someone, and, you know, the consumer spending, it's still growing a little bit, but the growth in it is declining. So it's not growing as much as it was before. The growth is declining. So that isn't totally good. But again, it isn't, the consumer spending hasn't fully gone down yet compared to other months and stuff. Still growing a little bit, but I do think that we're going to start seeing a stark decline at some point. I was listening to Jerome Powell, at the last Fed meeting, which I believe was last Wednesday. I believe, yeah. And he basically admitted that, and he kind of sidetracked. He said two things. The one thing he really admitted to, the other thing he tried to hide it under the rug. And this was the credit problem, okay? Not just credit card spending, but not really that, but the credit for banks for other things. Forget about what Finwit, Zimbit, whatever. Forget about what they said. It should have been declined years ago. So forget about that. But the credit is a problem, though. Okay, the credit rating. Well, not the credit rating, but the credit itself is a problem for the American people and for the banks, and that's because they're going to have a tougher time. You're going to have a tougher time getting money, and the government's going to have a tougher time lending. I think that's more the government than you, to be specific. But but yes, he kind of shrugged it under the rug, Jerome Powell, and was like, well, yeah, and then he quickly went to a different question. The other thing he talked about was the interest rates and how, and he kind of went in a little bit more into depth with this one, about how the interest rates haven't fully been effective to the market or to other things. I guess you can say in 2022 it definitely was. I would admit that. Do we think that the October lows is the low? I hate to say this, I don't think, and this is the reason. My reasoning is because, not that most of the prices, or let me rephrase, it's that a lot of these stocks, unless the market's going to transition into different, it's going to rebound into these other stocks, which is definitely plausible. But if the economy does start to slow down, because now the Fed has said no recession, then you will see, then it's not really going to matter if they start pumping into these stocks, because then earnings are going to start really declining. Earnings, I don't really look at earnings right now and go, ooh, yummy or good. These are really good earnings. They're not. If you look on a year-to-year basis, on some of these companies, they're not even beating a year-to-year basis. And these earnings are really, the expectations are just so low that it's easily able to beat. I'm not saying for everyone, But for a lot of them, that's what it's happening, and a lot of them are kind of skewed in a certain way. The other thing is the Fed said that we're not going to see a recession. Well, they also said that back in 2008, early 2008. I think in January, February, and in September we had a recession. So they're not very good at predicting recessions or not. They're not good at predicting soft landings or hard landings, because they said that we weren't going to have a hard landing or we were going to have a soft landing in 2000, and 2001, 2002, we had a huge hard landing. So, they don't know. I would say that we did, at one point we actually were in a recession if you go back to 2022 of June, in the summer of 2022. But I don't really count it because it was so wishy-washy. I think in certain areas in this country, yes, I do think people are starting to feel it. I do think people are going to start getting crushed. You have to understand, people are now 10% of the country is now going to have to start paying back their, student loans again, which is going to hurt a lot of people. Okay, so 10% of the country is, it's not that big, but if those people can't totally pay off, well, then it could get expanding, because, well, if the parents are now starting to have to pay for it, well, then they may not be able to spend as much too. So it's not just going to hurt them, it's also going to hurt those other people. Okay, so that's why I say around 10%. It's going to affect, and again, it could affect a lot more variety of people. So to be honest with you, I don't really know what the effects are going to be totally. I still think we're going to have, a last hurrah in oil, where oil's going to go back up to $90, $100 per barrel, or at least get close to $100 per barrel. Now, some people are expecting it to go all the way up and break all-time highs to 130. Now that, a lot of things would have to happen for that to happen, and listen, it could. I mean, we probably would have to see World War III happen. We would have to see, them to continue to cut oil prices and the demand to just shoot up like crazy. I know oil prices or gas prices are starting to come up because crude and the Brent is going up. I got in oil, made a nice 10%. It took me about a month, but that was nice. I would say about a month, probably a little less than a month, but it was basically a month. I probably could have sat in it for a little bit longer, but I liked it. I may get back into it. If I was in Occidental Petroleum, do not buy Occidental Petroleum. I'm out of it, and do not do what I do, okay? If I go into something, that doesn't mean anything, because I could be totally wrong, right? And I'm not telling you to go into oil, okay? Do not buy oil stocks because I said so. You need to go look at that company and figure out what exactly, if that company's good. Plus, you shouldn't be investing because of what I said, okay? Because I may have a different strategy or a different thing or a different way of doing things. And I'm not really that great. I haven't been in the market. But, I may have a different strategy than you, and I may be looking at it differently than most other people. So don't be buying oil stocks because I'm interested in them or whatever. Right now, I'm not really interested in them. For me, I really want to buy more for myself, but I've been kind of holding myself back because I'm like, okay, it goes to 100. These things probably will go up, but my problem is, it's like, well, if it doesn't, then I'm going to get crushed in it, and I'm going to lose all my money because I made over $6, so in profit. So I want to keep that. The other thing is that so we talked about Occidental. Disney has earnings today as I recorded. I don't know if this is going to be up in time, but Disney does have earnings this afternoon, the day that I recorded this, which was August, I believe it's August 9th today. Hold on, let me make sure that it's August 9th, because I might be wrong. Sorry. Yeah, it's August 9th. So I recorded this on August 9th, 2023. So today, after the market closes, I think at 4:30, maybe even 5, Disney will be reporting earnings. So that's going to be interesting because I don't personally own much of it, but I know someone that I know does own just one share. That's because I put them in there. Do not buy that. It's not, that's a risk. Okay, it's not really a long term. I shouldn't say it's not a long term. It's kind of a long term, but it's kind of like a see what happens type of thing. I just put it in there because I didn't want to miss out on this huge uptrend if we have one here with Disney, because it has been beaten down for a while now, and usually with these trends and these and this and that, plus Disney again has a lot of stuff being hammered at it, and when a lot of things are being hammered at it, like if it goes down to 70, I'm going to buy more, or 76, I'm going to be buying more, but do not buy it because I'm buying, okay? I have a different idea, I have a different strategy, I have a different everything, okay? And I look at the stock market probably different than you, and I'm not even that good, so don't even look at what I'm doing and say, ooh. Should you look at it maybe if you were interested? Yeah, I would definitely, if you're interested, I would do some research. But don't be interested because of me, okay? I'm only interested because I see something, but again, there's a lot of risk. You have to understand, I've done some research in it that, if certain things don't happen, well, this thing's going to really get crushed. They're going to have to they're going to have to figure out a way to get their, first of all, they're going to have to spend, $8 to $9 billion on paying Comcast for their 33% stake in Hulu to buy the rest of it, and they're going to have to sell some assets to do that. At least they want to. That's what Bob Iger said. So they're going to sell ABC. They're going to sell some cable networks. I was listening about ESPN. There was a good article that was basically they were on a different side, and they were basically saying that, ESPN is kind of a burden for, Disney. And I actually kind of agreed with the article in a way, and I actually read a lot of the comments after the article. And a lot of this stuff was kind of the same. I mean, I probably read about 20 comments. Now, I'm not saying that's a whole lot, but I'm just saying, a lot of it was the same thing over and over and over again, and there was a couple of different things, but it kind of all came to the same thing, and the conclusion was that the reason why ESPN there's not as much viewership, well, first, it's on cable, but second, it's because they talk too much about, not totally about sports, they talk about other things going on in the world, and it seemed like people just wanted to watch sports. I'm not being political here, I'm just saying this is what these people were saying. The people that want to watch it aren't watching it because they talk too much about all this other stuff. Now, I also watch it because I don't give a crap, okay? But I don't watch it that much, honestly, because, I like sports, but I barely even watch the sports in general. I don't really start watching to the playoffs. Maybe I'm a bad person, but but I sometimes watch it when I'm in, because I'm a Philadelphia fan of all the Philadelphia sports teams. So I'll watch like the Eagles, and I'll sometimes watch the Phillies game. But there's just so many, you can't sit there and watch every game. I don't totally follow them all, and I listen to people and I hear people on Twitter, so that's where I get my updates from. But ESPN, they're thinking about sorry to get distracted, but ESPN Plus, they haven't pulled the trigger with cable yet because the problem is that they don't know when, and they're trying to find the really perfect time. And the problem with that is that, well, they're not going to. Okay, they can find the best time. They might be able to find a really decent time, but they're not. They're going to have to figure out a way to basically match what they're making from cable, okay, with their streaming, and double that. So they're making more with cable and with the streaming, so in earnings, in profit, and in revenue, I guess. So then they can still grow. Right now with Disney, and I'm not worried about the writer's strike and the actor's strike, and let me explain why. Because they made a good point. Most of these TV people, and I actually think this is a good thing for Disney. Let me tell you why. Because Disney went too far in the diversity shenanigans. Okay, now I'm not saying that we shouldn't have different people play different parts. But if people aren't watching it and you're having bad records, okay, why produce it? Okay, that's what I just don't get that, okay? The problem with Disney is they haven't made anything new. That is theirs. You know, they bought Pixar and then they started to really destroy it because they you know, in recent years they've just been putting out movies that people don't want to watch. You know, not as many as they usually would get, okay? And you can't say, oh, well, that's because not a lot of people are going to movie theaters. That's not true. If that was true, then I would say, okay. But it isn't true. Okay, people are going to see, you know, they're going out to see Sound of Freedom, you know, which was not even international yet. They're going out to see Barbie. Okay, they're going out to see, I don't know about Oppenheimer, but I know these are the ones that are out right now. You know, so I don't want to hear that, oh, blah, 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 blah. They were going out to see Super Mario Brothers. It's because they went too far at this direction and they need to pull themselves back and tell themselves, okay, we got to stop this stuff. How can we fix this problem? Well, it's simple. Let's go back to our roots and bring the magic back to Disney. The problem with Disney right now, and since I've read so much about it, is that their branding is getting deteriorated. Okay, they used to have this huge brand, and then they lost all these customers because they went too far on the different aisles. Just stay neutral. Tell BlackRock, Larry Fink, that he can kiss his bloopty bloop, because you know we're not here to be doing all this crazy stuff. Okay, you know, tell him to kiss his bloopty bloop, and if he doesn't like it, then that's what you need to tell him. Okay, he needs to go tell him to go back up to New York, or he can leave the country and tell him goodbye, because he doesn't represent the rest of the country. He represents himself. So we're not here to represent you. We're here to represent the people, you know, that want to watch this type of stuff. Okay, and they're not really bringing any new shows in. Now maybe that's because, you know, we have the actors strike, we have this, but they're not really bringing any new shows in. Okay, you know, Disney. What I don't get though, the other thing is that they just have so much getting ahead of them. Okay, they have the theme parks, they're still not fully capacitated. At one point they were actually getting all-time highs back in like May and April and stuff. But it doesn't matter because right now they're not. They're not back to 2019 highs yet. Okay, now it is kind of seasonal. You know, it's really hot down there, so there is going to be a little bit less people down there than usual. It's just not as bad as it is usually. It's usually still a decent amount of people there. There still is a decent amount of people there. Okay, there's still you know, loads of people there. It's just that when you look in 2019, you know, it was a lot different. There was a lot more people around this time. So it's seasonal. You know, but a lot of it it's on them. A lot of it they did themselves. Okay, they rose. Well, first of all, they rose the prices, okay, of their tickets to go to the theme parks, which was just stupid. Okay, you know, no one's going to spend the amount of money now. I mean, it was already expensive as it is, and yeah, and they're going to go up with inflation, but they went way too far, and so they're going to have to fix that. So that's one problem. You know, again, we have we still have to wait for the streaming services to really make profit, and then we also, you know, are going to have other problems. So they have a lot of situations that they're going to have to figure out. That's why I'm telling people, you know, you shouldn't be investing because I am. You know, why I invested was because of or traded, whatever, is because of something totally different. Is because I kind of think that there could be a quick rally maybe, and then we're going to get in and out. You know, I'm probably not going to stick in this thing, but I'm going to watch it because I do think that if the streaming thing does work out and can bring a lot more revenue and profit, and the theme parks, you know, still grow with inflation and grow a little bit more, you know, then they'll be able to still grow their stuff, okay? And the movies are just going to be the movies, okay? It's just what it is. So, I mean, it's really going to be up to these people to get things done, but I don't know. We'll have to wait and see. I mean, this is, a lot of it is just a bunch of stupidness, okay? They spent way too much on Fox Century. They shouldn't have spent $75 billion. So that's just what it is. You know, we'll just have to wait and see. But that's Disney. PayPal, I've been, in PayPal. Well, I put someone in PayPal. Did not invest in PayPal either. PayPal is another iffy play. Again, that's more of a rally type play also. Waiting to see this rally. But if it doesn't rally, we're going to buy more, because I'm not worried about seeing it. To me, it's, I still think they're going to grow revenue. Their earnings are still going to grow, So there's a lot of things that they still have, but they're going to have to start competing with Apple and stuff, which they already are. So they're going to have to compete. But, I don't mind them. So we'll see what happens with them. Amazon, I haven't really done anything with Amazon. The big names I really haven't touched or looked at because they're just still way too, in my opinion. Apple is coming back a little bit. That's part of the reason why the market's down, and it should be. I mean, they're not a $3 trillion company. You can say it 10 different ways, or still not a $3 trillion company. They might. I think they're valued at like 1.5 on the stock market. So, and they're just under 3 trillion now. They're probably a little bit closer to 280 or something, 2.8 trillion. But we'll have to wait and see. Nvidia is another stock that is very interesting when it comes to that it's overvalued. So it's not interesting if you're going to go out and look at it. I do not recommend. It looks like it's slowly starting to want to come back a little bit, and it should. Okay, it's way too overvalued for a stock like that it is. I mean, frankly. I don't know. I mean, these are kind of the stocks that, I haven't really been looking at, and the ones that I have, I got rid of Schwab. I'll buy back into Schwab when it goes back down to 45, which I do believe it will. Like, a lot of people are like thinking, oh, these banks, when the regional banks do end up collapsing again, which I don't know if it's going to happen or not, because they may try to play a game and they already have started. The government has. But if these banks do contract a lot, well, the big banks are going to too. Okay, because they're going to be infected in the sense that people are going to get scared of them, so they're going to pull their money out of them because the regional banks are down. You can look what happened over there. I honestly think the regional banks can come back down again. I really do. These banks, and again, Schwab isn't out of the circle. Now, they're really big, so, again, they're not going to get hit as hard. Like, if these bigger banks get hit, well, then they're going to get hit. Everyone's going to get hit. So that's not really my worry. The banks has a problem, and Moody's just came out and said that the regional banks have problems. Now, they want you also to believe that because they're trying to contract. They're trying to get us all into these big banks, okay? Because they want us to use these CBDCs. And they said, oh, we're not going to do this. We're not doing this. A bunch of baloney. You'll see. They're going to do it. Don't worry. It may be in another couple years, but they'll do it unless you guys wake up fast enough and then you'll fight them. Then they probably won't. But you guys are still asleep. So what we have to look at is what these people are trying to do. But I'm not going to get into that because that goes into 10 different other things. So that's basically what's really going on. But I'm going to go to a different subject. I'm really excited because I sold my first product on eBay, a used product of mine, and I sold one product, and I'm very excited about that. I'm not going to go into details of what it was because it's not important, and plus someone already bought it, so that's, it's already been sent out, so I'm excited about that. But what I will say is that on my website, which I think I'm going to probably put down in the link below if I can. I don't know if I'll be able to, but I put on my eBay a LaMelo ball so you can start bidding for it starts at $30. It may be up now. I don't think it is. So you have about another 5 days. And then I have a Julie Ertz scarf for $15. So if you want to buy that, you can. And then I have this old. Many of you probably don't know what it is. I didn't really know what it was when I inherited it, but it's a car that goes around the table, but it doesn't fall off the table. So it catches itself before it falls off. It's a really old toy. I mean, we're talking back in the 60s. Okay, so that's going to cost you $115 plus shipping. All of it's plus shipping. Let me tell you. Okay, and then I have other stuff that I'll probably not really put in the link. I don't think I'm going to put any of these in the link because I probably won't be able to, but well, I probably will be, but I don't know if I'm going to. It will depend on if I can figure it out fast enough. So, but yeah, I'm excited about that, and I have some other things going on that I'm doing. I started and trying to get things moving. So yeah, so some exciting things are possibly could be coming my way, but we'll have to wait and see. I have a lot of future ahead of me, hopefully, and we're gonna keep it growing. So that's basically what's been going on. I'm sorry I didn't post in the last week. I've been lazy / just a lot of craziness going on in my head because I have, I just have had a lot of stuff that I had to make sure that everything was in line because I, was doing this and I had to make sure this. And I'm not complaining to you. I like doing that. It's just, yesterday I was thinking about actually doing this, but I never did. But it's whatever. So, but again, this is episode 11. Please subscribe. Please like or don't like. I don't care. Whatever, to get the YouTube algorithm to really push this out there. And turn on your post notifications. This is the Knowledgeable Podcast, and I would like to thank you for your time, and thank you for watching. Goodbye.